Hi everyone, welcome back to Be Rich. It's me, Vinod, and welcome back to the first week of December. I hope all of you have managed to look at the market and see some value and have been thinking and considering carefully at what you wish to buy and invest at this juncture. Why I'm saying at this juncture? Because we are in an interesting time. Let me walk through you what's happening macroeconomically, then I'll walk through what's happening domestically, and then we'll try and come to a conclusion of what we should do out for this week and how I can help you plan some of your personal finances. That's what I want to talk about mainly in this video. So, as I'm recording this video, the market opened on negative, but now people have been buying. I think the FIs are still selling. The domestic investors seem to be buying, and they push the market up from a negative opening to a positive of 0.5% or little more than 0.5%. The stocks which we always talk about in consideration are still at great value buys, is what I feel. One of our followers in Instagram had reached out to me and said, "Sir, you should be very careful on what you're saying because I'm what you call influencing stock price." I said, "How am I influencing stock price?" He said, "Sir, you have millions of followers, and you are pointing at certain stocks and maybe you are doing some price manipulation." And I said, "I don't think that's possible, first of all, because I'm not asking you guys to buy anything. I'm not asking you to sell anything. I'm just sharing with you what I'm doing. And I hope that's very clear. And I've always been very ample and loudly stating that I'm not a registered advisor from SEBI or anywhere, that I'm just doing this as for my own personal investment. And I just share whatever I'm learned from my brother here, hoping that you guys don't copy me, but try and learn something and figure out your own way to invest. That is my main intention. And even the companies which I do mention are very big companies. Most of them are large caps. And the trade volumes, what you're looking at, are so enormous. I really don't think me buying one or two in Tiffin coffee, just like my brother says, is going to create such a massive ripple in the market. But if you are suspicious or sus, as your generation says, my intentions, please do not buy or consider or do whatever based on anything I share. Still participate, try and learn what I'm talking about, then figure it out for yourself. Even then, I'm happy. There is no need to do anything what I'm saying that you should do. All I want is you to feel inspired and use that inspiration into going and investing and securing your future and your freedom, whichever way you seem fit. That was like a big, long of a public announcement which I wanted to get out there to assure you that my intentions here is not trying to point at a certain direction and flip something or do anything of that sort. I don't have any of that intention. So if I'm with you up, I'm also with you when it goes down. As far as the market is concerned, I told you, in FII selling in November, 26,000 crores has been sold in India, and that keeps on track with what's been happening. But that's interesting only as far as November is concerned, because now we're fastly approaching the end of the year, and in Europe and in the US, December is a big holiday season for them. It is like our Diwali holidays. So pretty much we'll see a cooling down from the FIIs during the second half of December to the first week of January, when December and New Year holidays are being celebrated by them. So this will be an opportunity where you go and see the market sitting in a bit of a lull. Even domestic investors in India will be supporting the market, but you will not see any huge dramatic selling or buying in the market. Is usually what happens year on year. We'll have to wait and watch. Does that hold for this coming year? The other major piece of news which I want to talk about is the inflation data, which is of interest to all of us. Not the Indian inflation data, which we've been talking about for some time, but the American inflation data. We have recently heard about what Trump said about BRICS and what he said about China and what he has said about what he wants to do with Canada and Mexico in terms of tariffs. He has warned BRICS nations, saying, if you guys try and do anything to the almighty dollar, I will unleash hell upon you and put 100% tariff. There is no way you can allow the dominance of the dollar to be shaken. But it's understandable because the Americans love borrowing on their currency, and as long as the world keeps buying their currency, they can do as they wish, and we are slaves to the dollar. If there ever comes a point when the world starts looking at others and the faith in the dollar is shaken, that will put the American economy in a tailspin, which is understandable for him to get into this and beat his chest. But that aside, which is mostly political bravado, because there's nothing really happening in BRICS. There is no real threat to the dollar. This is all just on a political stage, which is what is happening. But where I wanted to focus on is what has been happening in the US, is that inflation has become very sticky at 3. The Fed usually likes to bring American inflation down to 2, and it's not coming down to 2. It came down nicely, drastically from 6 all the way down to 3. And now if you look at the graph closely, it is showing trends. Maybe it is getting sticky and even might start ticking upwards. It has not moved upwards, but it is showing notions of it. That means if you look at the inflation data, the American dollar from June 2020 to now, the purchasing power of the dollar has almost lost 20%. That's 1/5. That means if something was costing you, let's say $100 in June 2020, now it'll probably cost you $120 on an average. That is, this purchasing power of the dollar is what is being lost. This kind of inflation sticky we saw in 1972. Yes, you cannot compare historical data with current data and draw any conclusions, but what you can draw is, if that same thing happens, what is likely to happen. If the situation in the world was such that in 1972, the geopolitical tensions over oil and other situations, the Yom Kippur War and all that, pushed American inflation through the roof from that point onwards, and we had a decade long of high inflation in the US, which we remember all what happened with Paul Volcker and the American economy at that point of time to tame that inflation. Same way are we at that cusp, because the trigger points for this kind of a situation are set. Trump is very clear that he wants to do tariff wars with China. He wants to do tariff wars with Canada and Mexico. And his policies, whatever he's thinking of, is only going to increase the inflation in the US if he follows through with all of them. If that is done, then we can see a period of high inflation returning in the US, further adding more pressure on the Fed, which wants to control inflation and bring it down to 2 and not leave it at 3, be forced to act. And what they look at is something known as the core inflation. Core inflation in the US is without food and energy in it, and they remove food and energy and they look at the rest of it, which is housing, shelter, medical and all other things. And that core inflation is what is sticky at 3. The reason why they don't put food and energy into their inflation, they only look at core inflation, is food and energy seem to be very volatile, the prices and the fluctuations, so it doesn't give you a clear picture of where the true inflation is. So the Fed usually likes to remove these two things and look at it. So that is why they look at the core inflation. And even that is sticky at 3. So we have to wait and watch to see what happens post-Jan after Trump is sworn in. He's already been filling in his cabinet. He's been filling in all the positions he wants. So he's going to hit the track running, as I say. And we'll have to wait and watch. Even gold, that's why it has performed so well this year since Jan. If you look at gold piece from sometime in the 1st of Jan or even mid-Feb to now end of October or beginning in November, has gone up by almost 28-30%. And recently gold has taken a bit of a correction, come down to 22%. So anywhere between 22 to 28% is where gold has gone up from Jan to now. So that shows you how inflation's been affecting the American economy. So this is all the stuff at the macro level which I wanted to discuss. One, the FIIs have been selling insanely in November. December, you can expect a bit of a lull because usually they take their holidays very seriously there. So we won't see much activity from the FIIs during this month, especially the second half of this month. So we'll have to wait and watch there. So keep an eye on that. And second most important thing is the American inflation data. Historically speaking, at 3 is not where they like to be. They like to be lower than 3, at near 2 is where they would like to be. So based on all the rhetoric from Trump and what he wants to do, his plans of tariff and everything else domestically is going to push their inflation through the roof. So that's another thing which we have to keep in mind as we roll on to next year. Because if that inflation gets sticky, the Fed raises the interest rate, uses Treasury interest rate goes up, more FIIs will want to keep their money in the US, la-di-da, da-da-da. We know this story before we have spoken. That means the FIIs will want to take their currency back to United States. There'll be dollar flight happening all over the developing economies and other large economies. And with the trade war looming, God only knows what will happen. So it gives us opportunities. As investors, what does it give? All these doesn't mean you should immediately get worried and start panicking. What this means is it gives investors, value investors, these are the opportunities we have been waiting for. So if these storms align and chaos breaks loose, then opportunities will come there in the market. And companies which we have been looking at will look fabulously well. All our pharmaceutical companies like the Reddy's, the Natcos, and all the IT companies like the Infosys, the TCSs, all of the big wigs will start looking very value buys at that point of time when the market does take a huge correction. Is it going to happen? I don't know. But sometimes it does happen, and more often or not, even so much of confusion is there in the market, these things tend to transpire into panic selling in the market. So we can keep an eye out for this. So what I really wanted to hit upon at the end of this video now was what you need to do to prepare for this, right? In any given month, right? Like I've been telling you before, 80% of investing is savings, because the more you save, the more you forego gratification, the more you don't take your salary out of your account, and the more you leave it in your account, more the money you're going to have to invest. So you need to focus in the next few months on savings. Savings means not spending. I'm not talking about savings in terms of, putting in your savings account or putting in FD or anything like that. Don't get confused. What I want you to do is stop spending. And if you look at, I know when I say 30 days in a month, don't spend, it looks like a big number and looks very daunting and looks very hard. So let's break it down. If you take 4 weeks, take the last 2 columns of the calendar, that is your Saturday and Sunday. Those are your 2 enemies, Saturdays and Sundays, because Friday night, so it spills onto a Saturday and Sunday. Those are the 2 days when spending goes array and we try to go crazy when we want to relax during the weekend, because during the week we're all working. Spending doesn't seem to be happening much. Whatever the spending we do during the week is all out of necessity, either groceries or staples which we need, or it is something which is required at home which we do, like fees and all that, which you cannot forego. Where you can forego and go on a diet is those last 2 days. So I want you to pay attention in the following few months on your Saturday and Sunday spendings. I want you to track your Saturday and Sunday spendings. And what I want you to teach you is a trick. Stop saying no to your spendings, because no never works. We are brought up in an economy now, we say yes to everything. So it's very difficult for you now all of a sudden to say no to something you want to do. Try and pivot and try and replace and try to put things that slow down that spending. Let's say you and your friend decide to go out for biryani in the evening. Instead of taking your bikes and going there, decide to walk to the restaurant and walk back home. These kinds of things will impede the spending. You will probably start walking towards the restaurant. Who knows? Halfway, your friend might feel tired or you might feel tired and decide, you know what, we'll just pop in here and have something else light and get back home. Could happen. So find ways of impeding that spending and replace spending. So instead of buying something at X amount, maybe you can buy that same thing to gratify that feeling of that you did do something, buy something. You can buy something cheaper at Y amount. These are the ways to do it. So this kind of stop saying no, try and change that spending habit into something cheaper is where these small amounts will add up. Right? None of this will happen overnight. That's why I said focus on doing it over the next few months. Like how all of us are trying to lose weight who are overweight. All of us have goals we're trying to do. As investors, our goal should always be trying to cut down our spending. So work on this, right? Be self-conscious whenever time you spend, and this kind of positive reinforcement will help. And one of the best ways to give rewards as an investor to yourself is whenever you feel down that you've not spent and you're feeling really bad about it, that's the time you should open and look into your portfolio. And don't look at the price, but look at all the stuff you've bought, right? All the shares you've bought, all the Karnataka banks you bought, South Indian banks you bought, all the ITCUs you bought. You count all that up, and that will make you suddenly have a sense of revelation that no, I've not been missing out. Actually, I've been investing in and I've been enjoying and I'm building myself a future to look forward to. So these are the ways I would say you should think of saving. So attack those Saturdays and Sundays from Friday evening to Sunday evening. Take it a challenge to try and curb your spending so your savings grow. Because if only you create that kind of pool of funds in your account, in your savings account, in your salary account, when the opportunities come in the market, you will have the funds to invest, right? So keep this in mind. Find ways and means to save. If you do that, can you get down into investing and talk about the rest of the nice things we talk about. Having a patas list is nice. Knowing about Tata Motors, PE ratios of Natco being below 13, below 12 is nice. But at the end of the day, if you don't have the 1,200, 1,400 rupees to buy it, what's the point, right? That's what gets us into a lot of trouble. So I want you to focus on that, and that should definitely help you get closer to your goal of investing. So this is a food for thought I wanted to offer you today to think about, right? We've spoken about what's happening macroeconomically. We've spoken about the global storm that is coming from January onwards. So what do we need to do for that? Also, I've given you an outline. Let's go on a diet. Let's start savings. Let's create that corpus fund Let us create that war chest so that when the opportunity comes next year, if it does come, we'll have funds at least ready to invest and deploy and do something. So start building that habit of savings, stop spending, and put off your gratification. Other than that, those of you who have already managed to conquer this and have funds for you this month, do stay in different coffee ranges. Do not go out of different coffee ranges. As you see, the market does swing wildly. You've seen the way Natco prices have gone over the last few weeks. You've seen it gone down by 3-4%, then gone up by 3-4%. Today it is up, I think, almost 5%. So if you put too much money into it, then you'll be burning. So keep those in mind. That's why I keep saying, and Anand keeps saying, buy in different coffee ranges. So the pain which you feel is minimal and you won't mind when you see the prices going up by a few 20-30 rupees up this way or that way. Thanks for watching the video as always. Do catch me on Instagram and ask me your questions and let's have conversations there. Other than that, nothing more, and I'll see you tomorrow again with another video. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.